Hi there, and welcome to the latest edition of the Armchair Traders Look Ahead. As always, we're joined by Chris Tubby, trader and educator from Symax Fintech. I hope you've had a good week, Chris.
Yeah, it's been amazing. Yeah, it's been really good. And I spent the day at the IX exhibition yesterday in London, where I was on the panel doing a round table and also a presentation. So it was a very busy day, but it was great. It was lovely to just meet so many new traders and investors looking to get into the market, obviously, as well as some established ones.
It's always good to get that feedback as well, isn't it?
Yeah, it is, most
Sure.
definitely.
No, that's great. Right, so we're looking at the week ahead. I guess the key story for the week is First Republic, the bank. I wonder if you can sort of give us a little bit of a précis of what's going on there, and how sort of it might sort of impact on what we're looking at for the week ahead.
Yeah, so banks are back in the headline again, and as usual, not in a good way. So confidence in First Republic Bank it just seems to have evaporated now. On Friday, the shares sort of dropped about 43%, and then after that, sort of there was a further sort of dive of them, and I think the expectations now is the fact that it could go into receivership. Now, I think there's a few things here. Is first of all, you just got to wonder what's going on with bank supervision, and I think it's time that they really sort of looked at the requirements of some of these U.S. banks, or just maybe financial firms in general. And I think the reason around that is because okay, 100 billion is or above 100 billion is what's considered to be one of the bigger banks, if you like, but someone that's got 90 billion or 80 billion, I don't know how much they had, but for example, I mean, for the customers, that's as important as the guys that have got 500 billion. So I think that, this needs to be sort of addressed. There's got to be some form of compliance and regulation around all financial institutions to a higher level than it seems there is at the moment. It shouldn't be a case of if you're worth less than 100 billion, you slip under the system, and you've got much weaker regulation around you, because that's dangerous for the savers and investors.
I think.
And I think after SVB and Signatures banks, that maybe there is some oversight missing there, and that's something that they need to address. And it seems to me for the banks, it's sorry, for the regulators, it's almost a case of we've got too big to fail, but it seems too small to either care about or save. Maybe is partly there as well. And I would say the final thing there is that, with First Republic Bank, is it going to be a situation where the government and the Fed will finally just jump in and save it? Maybe they'll use the FDIC funds to pump something in there to try and give it a lifeline. It doesn't seem as though the 11 banks that pumped in the 30 billion previously seem keen to put any more into it. So, for me, there shouldn't be, but there is obviously that expectation that there could be some bank fallout, just on the shares, and just the expectations going forward next week in the early, Monday, Tuesday, and then everything will start to sort of maybe open up again. I mean, even by sort of sometime Monday, they may have come up with a solution, or just a decision basically. Do we save it or do we just let it fail?
I think if they let it fail, that's going to have bigger implications in terms of confidence in all the banks. Would you say?
Well, it could do because are there any other banks in a similar position that that hasn't come to light yet? And I think this is where the regulators are perhaps not doing their job properly. That does sound a bit extreme, but as I say, why should there be a financial threshold of the banks that have got sort of that heightened oversight on them, and the smaller banks that, or considered smaller banks, less than 100 billion? which seems strange to me anyway. Less oversight when not everybody wants to put their money with the big guys. So what's the point of having all these other banks otherwise? Let's just have 20 super banks and forget the rest.
Yeah. Well, what are First Republic doing that's different and that's got them in this situation? Then, do you think?
Uh, Again, it's more sort of just a lack of confidence in them. And that started the run after SVB and Signature Banks dropped, so that sort of confidence sort of was going away from to a degree, probably a lot of the smaller banks, but this one sort of became much more highlighted. And the fact that 11 of the top big banks pumped 30 billion into it just to sort of try and hold it, give confidence that they weren't going to drop and fall under. I mean, it shows that there's not really anything fundamentally wrong with First Republic Bank. It just seems it's that sort of confidence thing again.
The
And
sentiment.
as we've mentioned before, it's just so easy to transfer your money these days. It's just a click of a button on your phone or your laptop or something, and the money's gone.
Yeah. So it's coming from sentiment essentially.
I believe so at the moment.
Yeah. Wow. Okay. I guess obviously that's going to have implications for banks, as you say, for certainly the early part of the week. But you don't see any other banks sort of having an issue, so this might not be as big as it seems right now.
As it seems right now, whether again, if investors start feeling uncomfortable with the smaller banks, if they start doing these transfers into the bigger banks next week, then that could suddenly sort of trigger much more of a lack of confidence. So it's really going to depend how the customers of the smaller banks really feel if and how much confidence they've got in the bank that they've actually got their deposits with.
So something for investors and traders to watch out for, certainly. There's more to look out for this coming week as well, isn't there? We've got the Federal Reserve interest rate decision. We've talked about that on previous videos. Um, what's your thinking there? Has it changed, or what do you see?
At the moment, you'd have to say that there's going to be a 0.25% increase again. The only slight possible is what's happening with First Republic Bank going to impact their decision on that? I don't think at the moment it should, but possibly by Wednesday, if some of the other smaller banks start to come under pressure, then would that make them sort of maybe just say, well, let's just leave rates where they are for a moment? Because obviously, there's a lot of consensus that it's all these massive increases that have been coming from the central banks over the last year or so that's actually sort of helped to put some of these smaller banks into problems. It all being longer treasuries at sort of 2.5%, when obviously now they're running at sort of pretty much 5%. So that could be just something that's at the back of their mind. I'm not saying it's going to change it, but it could do.
So
Uh,
you're, so you're saying you're saying that higher interest rates will put pressure on the smaller banks. What's that in terms of paying interest on for their customers and things?
well, it's already put pressure on them because when because rates were so low for so long, a lot of these banks were buying all the treasuries in, and they're still sitting on them, and so they're holding treasuries at 2% when interest rates are now 5%. So that's okay when they don't need that money for any reason. If they banks are natural lenders of money, so if they're lending out, it's okay. But for deposits coming in, they're paying a higher rate to for the money coming in than what they're holding, because they're basically holding these treasuries at 2%. But
Mm.
savers are going to want more than 2%. Otherwise, those small banks aren't competitive at
Yeah.
attracting money into them. system.
Yeah, and obviously people withdrawing that money is putting further pressure on.
Yeah, because it will get to the point where if they're holding all of their reserves effectively at the end of it in treasuries, they've then got to start selling those treasuries out at a loss to free up the capital to be able to pay the investors if they come in demanding their money.
Right. Well, it'd be interesting to see what the Federal Reserve does in light of that. What else have we got coming up this week?
Well, ECB as well. So that's going to be sort of how aggressive are they going to be? Is where traders are looking at that. Is that going to be 25 basis points or possibly 50? That's the inflation in general is just sort of leveling out at the moment. It's such a sticky thing. It's not rushing to come down, and there's no reason for it to. At the moment, profit margins from companies have just been boosted consistently, and if you look at sort of a lot of these companies, their sales have actually dropped down, but their profits have gone up, and that's because they've increased their prices so much. So they're willing to sell less, but they're still sort of winning from the situation because they're charging more for those products. And then, of course, on Friday, we've got NFP as well. So that's going to be another interesting situation. Again, for me, NFP number, fine. But I'm much more interested in the hours worked and, earnings because they're the sort of the inflationary parts of the data.
What do you think it's going to tell us, the NFP?
I think, as I say, it's for me, the NFP number itself, jobless claims keep creeping up, and for me personally, I just think that's going to continue. There is a pressure on the economy. You've got to remember all these interest rates hikes that are being done. It takes time for them to feed into the system. It's not overnight, so it takes months and months for those to literally feed in. And I think that you're only sort of slowly starting to see the impact of them in the economy now.
That's makes a lot of sense. So we'll see how that filters through. Chris, you're going to be working on a more in depth piece, looking at sort of the macroeconomic events for the week ahead and all your thoughts on there. So we'll put that in a link in the comments below once that's available later on. Thanks as always for joining us, and thanks to everyone who's watched. If you've got any thoughts or comments, then we'd love to hear them, and we'll come back to them. Thanks very
Yeah,
much.
have a great week, everyone.